Well, it was a record quarter for TSMC. I've been looking at this company for over 10 years, and I've never seen a Q1 see this revenue growth compared to Q4. I mean, it was a double-digit revenue growth quarter, which is very unusual. Normally, Q1 is seasonally weaker, but this was very strong. I think the most important thing in terms of the results that TSMC delivered this morning was they're not changing capital expenditure. You know, capex is going to change. It's going to stay at a $40 to $44 billion range. I think that's really important as a sign of confidence about the growth outlook beyond this year, because there's a big debate within the investment community about semiconductor being cyclical, and we're sort of in a peak environment right now. But if you're spending that type of capex this year and it's unchanged, I think that's a sign of confidence around how you see 2023 and beyond playing out at present.
We have seen, though, nonetheless, that kind of TSMC's share price has fallen a little bit in the last couple of months. And there have been some concerns that investors are going to be withdrawing from Taiwan amid geopolitical concerns, and also kind of concerns around expectations that the Fed is going to raise interest rates. Do we see any of those pressures in this earnings report?
So I think there's a couple of key issues that investors are focusing on. You know, one is when you have these kind of peak conditions, and semiconductor is a cyclical business, you tend to see investors reduce their holdings in anticipation of you know, a more difficult backdrop beyond the current peak conditions that we're seeing right now. I think for TSMC, there's an added question, as you mentioned, about geopolitics. Almost 100% of TSMC's wafer production is in Taiwan. I think investors want to see that get diversified over time to reduce the geopolitical risk that we see right now. And that's going to be an ongoing question that management is going to have to address.